Oh man, a shock. Jerome Powell meeting and press conference shuns markets violently here to the downside. Bitcoin plummeting, initially a green day, now in the red. Traditional markets here, the S&P, the Nasdaq falling sharply to the downside. What did Jerome Powell just say? I'm going to break that down and a lot more. Smash the likes. Don't forget to subscribe. Make sure you're in our Telegram community where we're actively trading the markets. IjazCrypto.com/TG to see my exact trades. Links in the description. Now I'm feeling a little bit under the weather, which is why I didn't do a live stream, but I'm here to bring you the key updates in a quick video here, guys. Jerome Powell came out, gave us a pause, right? Markets were expecting a pause. So why have the markets dumped? Well, it was the detail in his press conference where he came out particularly hawkish and gave us a few important updates, which I'm going to read to you. So he started off with the statement, and in the statement, they obviously paused the interest rate hike. Markets expected that. No problem whatsoever. No rate hike, no rate cut. Fine. But he also started then being hawkish. He said, don't expect anytime soon that they cut rates. Okay, interesting. Then when you go down and we started the press conference, the first thing he started saying was, the risk to the goals are starting to move into better balance. So we were thinking, okay, maybe he's going to be a little bit dovish here. Maybe he's going to give this one to us. But then he goes, I don't see rates cutting until we go nearer to the 2%. And this is where markets are getting a little bit confused. Market participants and investors thought we're there. We're pretty much there now. Remember, we were monitoring this leading up to the FOMC meeting. 50% of market participants were expecting a rate cut in March. And then Jerome Powell delivers a big bombshell, which I'm going to share with you as I walk through this now. He then said, then we need to understand something which is before we understand this. Now, what is the Fed trying to do right now? The Fed is trying to not tighten anymore. Now, people are getting this confused with loosening, right? Imagine he was tightening the economy, right? Hoovering up all this money from the economy for the last 18 months in the steepest rate hiking cycle, right? Hoovering up all this money. All he's saying now is by pausing, I've stopped hoovering, right? I'm not sucking money up from the economy anymore. What he's not saying is I'm prepared to loosen monetary policy, which is what a rate cut would do. A rate cut would be the equivalent of him saying, yep, I'm ready to turn the money printer back on and put money back into the economy. He's not saying that. He's saying I need to stop the tightening, which I've done, but I'm pausing now. I'm not hoovering money, nor am I printing. I'm letting the markets do its thing at this current rate hike level that we're at. Okay, that's what we're trying to say at the moment. So we need to understand that. So we then carried on into the press conference, and that's when he delivered us the bombshell that he's prepared to hold rates for longer if appropriate, and we believe policy rate likely at its peak for the cycle. So he gave us a positive. He said we're likely at the peak. I think markets pretty much know that. We don't expect another rate hike, so it's good for him to confirm that he's on the same page as us. But then he said he's prepared to hold rates for longer if appropriate, and this is where markets started to get a little bit worried. So we saw the markets trading up and down. We felt a little bit worried. Then he came out with a statement, it will be appropriate to dial back at some point this year. Now, this one was a really vague comment, right? Because we know from the summary of economic projections at the end of last year that he already told us the Fed officials had already voted on average that we're going to get 3 rate cuts this year. So markets have already gone and priced them in, right? So bit of I don't know why he said that. I guess we already know that, but fine. It's good that he said it, I guess. And then he came out and really did deliver us the bombshell. And he says, I don't think it's likely the Fed will cut in March. Let me read it out to you. I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to cut, but that's to be seen, right? And this is why markets started tumbling here. You can see on the candlesticks here, this was a big fall here, down 0.42% and then 0.7%. So over in that couple of hours, Bitcoin losing its green day into a red day. But now we need to analyze how big a deal is this, because you're seeing from traditional markets, which have been rallying a lot. Remember, Bitcoin's not been rallying that much recently here. It's kind of pulled back a little bit. But the Nasdaq and the S&Ps were at record highs because markets were really excited for tech earnings. They were really excited for this rate cut in March, and they were plowing ahead, right, with their risk on strategy. Now this is kind of just reality check them that, hang on, we might not be getting that in March. And so if you jump on over to the Fed rate monitor tool, you can see here, this has completely flip-flop, right? This now shows you what is going on in the March meeting. So now the vast majority of the market has to, based on what Powell said, price in that we're not getting a rate cut at this next meeting on March the 20th. So real big blow there for the markets. And really now the next meeting thereafter is May. So you're talking May before we could potentially get our first rate cut, which really does bother the markets. That's really upsetting to lose good 3-4 months like that with Jerome Powell's one statement there. So Jerome Powell definitely wants to tighten markets. He's seen that the S&P and NASDAQ is at all-time highs, and he wants to do what is known as jawboning, which is where he speaks, uses words to get markets to tighten for him. So he doesn't have to tighten with another rate hike, right, or leaving rates higher. He can just get the market to do his work for him, to calm down a bit, because he doesn't want the market to get super green and run away from him, only for inflation to rear its head again. Okay, let's also check in here, very importantly, on the dollar index as well, because the dollar index is, of course, going to be spiking on this news, right? Dollar index wanted exactly this news, and this becomes a little bit worrying now, because remember, what did I say? The dollar index at this critical level where it's reclaimed its daily EMA ribbon, it's above it, and it just wants to try bounce, and now it's got its reason to, right? It's got its reason to come here, break through, retest, and now go on its move here to the upside. And that's not going to be good for crypto and risk on markets, right? That's not going to be good for Bitcoin. That's not going to be good for your altcoins. So now we need to see how does the rest of the week line up in terms of this starting to trend here to the upside, because that can produce some pain here for Bitcoin. Now, as the market is digesting this news, it's actually okay. Bitcoin was doing all right. It was at this point here. I called this pullback in our Telegram. I said, guys, watch out. This level is overextended. Watch for the pullback into the EMA ribbon. Surely it hit, bounced really nicely, and then the FOMC messed us up back in. Okay? So the question now is, can Bitcoin hold the 4-hourly? It's still got the higher low. Look at that. Still got a higher low, which is great. Can it now rotate and go and push above? If it wants to sustain an upwards move, it has to get above this peak here, which is sitting there at 43.8. Okay? It's got to get past the candle high from the 30th of January. If we don't, there's just a risk we can curl over again. So we don't want to start seeing us do this. Okay, so I'm getting ready here on Bitcoin again on the daily chart. If it wants to come down and retest 41.6, no problem whatsoever. Even like I've said to you guys, even a pullback all the way into the weekly EMA ribbon at 38, even coming down here into kind of 36, I'm perfectly fine with it on a long-term basis. I'm more than happy buying the dip. That being said, markets still look quite positive, right? The question is going to be, will data come and back us up towards the back end of this week? Because on Friday, we now switch our focus to the non-farm payrolls to see, is the labor market starting to soften? Are we starting to see some of those numbers weaken? Because that could give us a clue of if we're going to get a rate cut sooner rather than later. Now, of course, it's important that we trade very, very carefully in this market. If you guys want to see exactly which trades am I taking, you want to be in our Telegram group, ijazcrypto.com/TG. Also, do me a big favor, guys. Go head over to my second channel. I'm going to leave the link on the end card of this video. Posted a really cool crypto trading challenge where I went on an Emirates flight and I tried to make back the money of the flight trading altcoins. So definitely go check that video out. Slightly different video for you guys, but I know you guys as a crypto audience will enjoy that as well. Thanks for watching. If you appreciate these type of updates live and straight as the news has come out, smash up the likes, don't forget to subscribe, and I'll see you in the next one.